Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news global equity markets have essentially bounced back, consigning the Monday ructions to just a summer wobble. But first up, there was another full dairy auction earlier today. It was a much larger event with more than 35,000 tonnes sold. Overall prices rose 0.5% from the prior full event 3 weeks ago. More than a quarter of the volumes were for skim milk powder, which fell 2.7%. More than half of the volume was for whole milk powder, which rose 2.4%. The rest of the products offered brought variable results too. Although the result was little change in US dollars, the much lower New Zealand dollar brought a 1.9% rise in local currency. Globally, world food prices are low and little changed. If any category is changing, it is a slight uptick in meat prices. In the US, the data released overnight was largely positive, assisting the financial market recoveries. The US Red Book Index of retail sales at physical stores was up 5.1% last week from a year ago, rising from the prior week. And their Logistics Managers Index rose more than expected, showing the logistics industry expanding more than expected in July and at a good clip. And the RCM TIPP Economic Optimism Index for investors rose in August to its highest level in 7 months. And US exports for both goods and services rose more in June than imports, allowing their trade deficit to ease back slightly. These exports are now 5.9% higher than year-ago levels. As we've noted before, this deficit is just a rounding error for the giant US economy, even if it is a political football. While none of these overnight data releases on their own are terribly important, the combination supported the sharp mood change. The earlier suggestion of imminent recession in the US may only have been from summer keyboard warriors. Canadian exports also rose notably in June to be 10.6% higher than a year ago. I know we've mentioned this before, along with the reasons, but the Chinese steel rebar price is turning into a bit of a rout, with extended sharp dives. It is now down almost 23% lower than year-ago levels. The copper price is wavering too. In fact, aggressive price discounting in many Chinese sectors has become the norm there, casting a pall over general business conditions. It probably can't go on like that without widespread enterprise failures. Elsewhere, EU retail sales volumes fell in June after a small rise in May. Most countries in the bloc struggled, but Spain, Portugal and Denmark were among the few that bucked the trend. And yesterday, the RBA left its policy rate unchanged at 4.35%. But its accompanying commentary was direct and specific. They haven't beaten inflation yet, and the progress they've made isn't sufficient. It was a hawkish hold. Markets bid up yields on benchmark bonds following the statement. The Aussie dollar rose. It seems there will be no rate cuts in Australia in 2024. What will now be of interest is whether financial markets take the RBA guidance on board in its pricing. And later this morning, Stats New Zealand will release the June labour market report for us. Our unemployment rate is expected to come in at 4.7%, a rise from 4.3% in the first quarter. And that would be an increase of more than 10,000 people without jobs in the quarter. But it could be more than that. The rise of those on JobSeeker benefits was 8,500 in the same period, but not everyone who is jobless claims for those benefits. But a notable rise above 4.7% would probably be influential in next week's RBNZ considerations, even if there is no longer a jobs mandate. The US Treasury 10-year yield is now just on 3.88% and up 11 basis points from yesterday. And the price of gold will start today down $12 at $2,391 an ounce. And oil prices are 50 US cents firmer at just under $73 a barrel in the US, while the international Brent price is just over $76.50 a barrel. And the Kiwi dollar starts today up 1/4 cent from this time yesterday at 59.6 US cents. Against the Aussie, though, we're down 20 basis points at 91.1 Australian cents. Against the euro, we're up 30 basis points at 54.5 euro cents. That all means our trade-weighted index starts today at 68.2 and up 20 basis points. And the Bitcoin price starts today at $56,690 and up 3.9% from where we left it yesterday, continuing the recent volatility. In fact, volatility over the past 24 hours has been very high at plus or minus 4.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. and we'll do this again tomorrow.